Good morning to all the fine folks watching this Bookmap stream this morning. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how it moves through the two-way auction process. So if you're trading the NASDAQ, if you're trading the S&P 500, you have come to the right place. We're going to talk about all of that this morning. All right, well, I like to start every week here on the Bookmap stream the same way I start it with my own personal trading, which is what's called a top-down approach. So essentially the idea is that as intraday traders, sometimes our lens becomes a little too hyper-focused on what's happening intraday, and we kind of lose track of what's happening bigger picture. But understanding what's happening bigger picture gives us context to understand what's happening intraday. So if you go back and rewatch this very live stream last week, you can see that I talked about this with a larger pullback in mind. Putting it in context would let us know where that larger pullback was going to take place. It ended up playing out exactly as expected. Okay, so I'm going to do it again this week. I'm going to try to nail it perfectly like I did last week, and we'll take it from there. All right. So to start with the top-down approach, what we do is we zoom all the way out to the monthly candles. All right. Why do we start with monthly candles if we're intraday traders? Well, because if a change is happening in the market that is bigger picture, right, that is happening over a series of months, that's very important information to understand what's happening over a series of weeks, which tells us what's happening over a series of days, which tells us what's happening intraday. So first things first, the monthly candle looks a little bit bearish here. Now there is context to add to that, right? We got the giant wick at the high, okay? But we are still doing what we call one time framing higher. So that means the last three monthly candles have made higher highs and higher lows. This can last for a very, very long time. The market can continue with momentum like this. If it's moving towards new all-time highs, it can get momentum like this for 6 months, 8 months, it doesn't matter, okay? So the fact that we have 3 months doesn't mean it has to run out. The fact that we still have higher lows means it could turn around and just keep going higher. So it's a little bit bearish looking, but it could also, make an equal case for the market to go higher. Not super helpful, but let's zoom into the weekly and see what we can get from that. See, now we can see the momentum that's been happening on a monthly time frame on the weekly. So here we had a couple of months of momentum to the upside, a couple of weeks of balance. Led to a couple of months of momentum to the upside, came back for a couple of weeks of balance. Led to momentum, and now once again we're getting balance. Okay? So momentum, balance, momentum, balance, momentum, balance. Why does that matter? Well, understanding where we are in the cycle on a weekly time frame, might give us context as to what's going to happen today, right? If we have momentum down on a weekly time frame, the market is likely to go down. If we have momentum up on a weekly time frame, the market is likely to go up, right? And when it shifts, when it stops going up and starts going down, or stops going down and starts going up, we can look for a change in the direction that the market is going to go. In that regard, last week's candle could potentially set us up for a change in the weekly time frame. Okay? We had this excess. We had some balance. So if we can turn around and get above last week's weekly high this week, we will start the next move of momentum to the upside. If we get below last week's weekly low, that will mean we need a larger pullback with price. Okay? Again, not super helpful. Let's zoom into the daily. Okay, so now we're getting a little bit of a cleaner picture of how the market has been moving. What do we see on the daily time frame? Well, a good all-time high, a high made in the regular trading hours, which tells us the market doesn't have to keep going higher, and it was made trying to break out of balance. So they should have been able to, in a when what should happens, they should have been able to keep that momentum going a little bit, but they couldn't. And as soon as they pulled back into that balance, the market crashed lower. So that shows us that the market got itself overextended on a daily time frame and needed a larger pullback. Well, we've gotten that larger pullback. We pulled back to fill this left behind gap that we had over here from June last week. Okay. After we did that, the market has gone sideways. So Thursday, we came in there. Friday, we just went sideways inside Thursday's range. We had what's called an inside day. So an inside day on a daily time frame is essentially the market telling us it doesn't know where it wants to go. It doesn't know if it wants to go up or down. It's just the market playing tug of war, trying to decide, are we going to break higher or are we going to break lower? Well, getting that inside day on Friday lets us know that all we need to do today is get a higher high on the daily, and the market is giving us a signal that that was the low. That Thursday's low was the low, and we're ready to turn around and start heading back up. Okay? Now, I know what you're thinking. You're like, Charles, it looks like we already made a higher high on the daily. Well, that is tricky because it doesn't count unless it's in the regular trading hours. So it is true that the overnight market spent the entire weekend trading in the upper end of yesterday's range, Friday's range. It was able to make a higher high not only above Friday's high, it was actually able to get above Thursday's high. So that is very bullish to see. However, it is not proof that the momentum to the downside is over yet. To truly trust on a daily time frame that we're not going to turn around and start heading lower today, we need to make a higher high intraday during the regular trading hours. Okay? So this is bullish. There's no doubt about it. This is a sign that the momentum to the downside is coming to an end. But it is not the sign the momentum is over. Okay? We got to do that in the regular trading hours. So that today is the only question that I care about. Intraday today, the only thing that I'm thinking about is, can the market get above Friday's high? If the market can get above Friday's high, it has potential to turn around and start heading much higher. Now, it doesn't mean it will. I'm not saying the minute it pokes above Friday's high, it instantly makes a 40-point move up. I'm just saying the potential for a very large move to the upside is there, right? If the potential for a very large move to the upside is there, guess what exists for a trader? A good reason to go long, right? A good reason to buy the market and see how far it could go. So that is my main focus this morning. Can they get above yesterday's high? If they cannot, right? If they try to get up to Friday's high, and this node right here, we'll call it between 55.26 and 55.20, if that acts as resistance and won't allow the market to get to Friday's high, that is a sign that we need to do one of two things. We either need to spend more time going sideways inside Thursday's range, or we need to start exploring lower prices, right? So resistance holding below Friday's high, below 26, that would be very bearish to see. That would tell me the market needs to pull back, either a little pullback or a big one. And again, if there's potential for a big pullback, what do I need to know as a trader? I have an opportunity to go short. Okay. So I am laser focused this morning on Friday's high at 55.28. If they can get above it, I want to be bullish because they are likely to get continuation in the day and days ahead to the upside. If they cannot get above it, then we're likely to get continuation lower in the day and days ahead. And then, of course, scenario number 3 is, what if we poke above it and then pull back in? So we poke above it, but we can't stay up there. We can't bring in new buyers above Friday's high. Well, then we're probably just going sideways in the upper end of Friday's range, very much like the overnight did here. Okay, so scenario number 1, market opens, pokes through the high from Friday, finds support, continues much higher. Okay, even potentially as far as 55.94, which is an unfilled gap from Wednesday of last week. Okay, does that mean it'll get there today? No, not necessarily, but that's the target to the upside, right? If the market looks above Friday's high and fails and pulls back in, we're likely to just go sideways in the upper end of the range. okay, and have a tight, range-bound, boring, grindy type of day, if the market tries to get in there and can't even get to Friday's high, that is likely to take the market lower, down towards 54.70. Okay. And I will be doing what is called monitoring for continuation lower from there. So if we poke above Friday's high and fail, or can't get above Friday's high, and then we get to Friday's low, the question is, what happens there? Do we just look below and fail? Great. More sideways, new selling, great, larger pullback with price. Okay. And so you say to me, you say, well, Charles, that sounds awfully nice. You just got to focus on Friday's high. You just got to wait for the information from the market as to what is going to happen there. And then you know how to trade for the day. But what happens in between market open and Friday's high? And that is what I call a chop zone. What they will chop it up. Okay, so what is a chop zone? A chop zone is basically an area where first thing in the morning, the market is likely to play tug of war. We are opening inside Friday's range, inside the overnight where they did a lot of chop. Okay, a majority of the trade in the overnight was above 55.06 and below Friday's high at 55.28. Okay, so that is my chop zone. I am assuming this morning they're going to take it up. They're going to reverse it down. They're going to take it up. They're going to reverse it down. They're going to take it up. They're going to reverse it down over and over and over again. Maybe for hours. Maybe for hours they'll do it. They're going to do it again and again and again because they want to convince as many traders as possible that they have to get long or they have to get short first thing in the morning, so that whichever way they're going to break, whether they're going to take the market higher today or they're going to take the market lower today, they can use the squeezing of the traders that are wrong in that chop zone to create that momentum. So if they push up and they get you long and they pull back down, and then they get you long and they pull back down, and they get you long and then they pull back down, and then they break lower, guess what happens to everybody that went long up there? They go, oh, fuck it, get me out of my trade. And then boop, 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 the market starts to head lower because people getting out of a long trade creates momentum down the same way as people entering short trades. Okay. And vice versa. They come down. Oh my God, I got to get short. It's going to run away without me. And then it comes back up and it comes back down. Oh my God, I got to get short. And then it goes back up and then it comes, I got to be short. And then it comes back up and it gets above Friday's high. And guess what happens? Boop, 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 boop. Right? You squeeze all those sellers. So I suspect we're going to get that chop between 55.06 and 55.28 this morning. And I don't need to participate during that time. I can let them chop it up, let them grind it up, because I know the better potential move will be trying to fill this gap up to 55.94 or trying to test the low from Thursday. That is the better opportunity. This shit in the middle, well, I just will not diddle, right? Because there's just no way to know. There's no edge from the market in understanding what is going to happen next. So there's no reason to waste time doing business. Instead, I should sit back, sip my coffee, hang out with the chat, have a good time, relax, and then later on in the day, when that better opportunity comes, then I start doing business. My odds of success are much higher because I have more information to work with. I'm not guessing. I'm using something the market has told me right now in real time as a signal for what is likely to happen next. And two, my mental capital is at 100%, right? I'm relaxed. I'm not stressed out. I haven't lost any money. I'm feeling good. Both of those things, the mental capital, the being psychologically calm and relaxed and focused, having not taken on any losses yet, that increases the odds of my success in my trading. And the waiting for the market generated information, waiting for the market this morning to tell me what it's likely to do today, that also increases my odds of success. And so that's just a better way to trade, in my humble opinion. So with that, I will turn it over to the chat. Good morning. What questions do you got for me? We got 15 minutes till the market opens. Nor Auto Trading in the house. Good morning to you. Jay is here. He says, good morning, traders and pirates. Trevor in the house. Will is here. Ships, hola. Jay says, the casino is open for business. Where is everyone this morning? It's a great question. Only 64 people hanging out. Why is no one saying good morning to me? Why is no one hitting the like button? Where are you people? I made it so easy for you today. I said you just got to watch Friday's High. That's all you got to do. Good morning, Mark and Novice Trader. Welcome, welcome. Okay, so we did the ES. Let's take a quick look at the NQ. So obviously the NQ and the ES are kind of doing the same thing. Very, very similar. And it looks like that continued into the weekend. So it's exactly the same setup for the NQ as the ES. Okay. Friday's trade was completely inside Thursday's trade. Okay. So that tells us that there's tug of war happening on the NQ, that the sellers are no longer completely in control. The buyers are trying to take control of the market. They're trying to step in and defend and start the momentum to the upside. Now, they haven't started it yet, but they are definitely trying to start it. Same exact thing as the ES. The level that matters to me most will be Friday's high. The difference is the overnight market over the weekend spent a lot more time and brought in a lot more volume at that high. Okay, so they were already playing tug of war all weekend long, trying to decide, is this market going to go higher or go lower? So if we open this morning, we got 12 minutes till the market opens. If we open above Friday's high with a gap up, that will be very bullish to see, because it will mean that the overnight has decided they want to try to make that move to the upside. Okay, if we open below, I expect Friday's high to be that resistance level. So same as we talked about the chop zone in the ES, you got a much tighter chop zone here in the NQ. I would draw it just like that right there. If you wanted to really make it tight, you could draw it like that right there. So you could say it's between, say, 19,300 and 19,180, or you could say 19,300 and 19,240. Okay? That's your chop zone. That's where they play tug of war. Whichever side breaks is likely to squeeze the other. Another thing that is worth noting, if the NQ can get above Friday's high, you got a lot of sellers in this market. Sellers that took the market lower, sellers straight into the close. They tried to reverse. The sellers smacked that motherfucker right back down, straight into the close. And then you had a sideways nothing day on the NQ. So you have a lot of sellers still in this market. A lot of people that are short the Q. Those sellers do not want to see the market make a higher high this morning, intraday. So you've got some potential for some short covering if you can break Friday's high. And I think that's why there was so much tug of war in the overnight. They were trying to cause that short covering in the overnight and they didn't get it. Now, the last thing that is worth mentioning, which is kind of the least fun thing to talk about, both the markets at the end of the week last week were moving like they're pinned, which basically means the options market was artificially keeping the market in a tight range. Looking at the Q right now, it does feel a little bit like a pin. Okay. How do I recognize when the market is pinned? You'll start to see points of control lined up very close to one another again and again. So I'm looking at this point of control from the overnight 3 nights ago and the point of control from the weekend. I'm looking at the point of control from Thursday and the point of control from Friday, right? I'm just recognizing that this is a very sort of machine-driven, artificial type of trade in here. If you look at the trade that the market did over the weekend, it literally moved exactly between Friday's point of control and Wednesday's point of control. Okay? So that, again, just feels very machine-driven and not necessarily human. So we got to add that as a potential that the market might just be pinned, and so we might get a slow, sideways, grindy, go-nothing type of day. But like I said, I think there's potential for some real short covering if these markets can break Friday's highs. Any questions from the chat? Any questions from the chat? Good morning again, Ships. Twice on the good morning to you. Michael is here. Jay in the house. Sonia. She says, good morning. New to this station. Well, thanks for tuning in. We're happy to have you. So what you're watching right now is Bookmap. Bookmap is a software company. They make this software that you see on the right side of my screen. It is Orderflow software, and it is the best I've seen as far as the options go. They have an excellent heat map. The heat map is the colors that you see in the background, which basically just show you how the liquidity is changing intraday. If you're looking at it and you're thinking, Charles, that's not very helpful, because you got these bracketing bots. You got some market maker in here fucking around with price, just throwing in limit orders above and below price and making it hard to read the heat map. Well, they've added a add-on that's completely free that anyone can use who has Bookmap called, what is it called? Trader Map Lite. Okay. And Trader Map Lite pulls out those market maker orders and just gives you kind of a cleaner look at the liquidity above and below. So this is their channel. If you enjoy the show and you're like, I could find value in this every day, you might consider joining the brigade. You'll see the banner at the top of the screen. I do these live streams every morning from 9:30 to 10:30 a.m. And it's only $10 a month. So literally less than a tick on the ES, and you could have guidance every morning on what the market is likely to do. From me to you. Good morning, TV. Guten Morgen. One Punch Panda in the house. Bill K is here. Wingmaster. Also first time here. We're happy to have you. Tom Gunn in the house. Arr. Alex says we have COD promo. I'm not sure what that means. We do not have COD promo because we don't know what that is. Six minutes to market open. Any questions from the chat? Any questions at all? Hello, traders. Tell me what's your questions. Market opens in 5 minutes from now. It'll probably go sideways for a bit. Chopping all of it. Squeezing at the high and the low. Can they get above Friday? I'm so sorry. I'll stop. I promise. Debbie B in the house. Good morning to you. We got 81 people hanging out, 40 likes. Thank you for those thumbs up. I appreciate you. Wow, the chat is super quiet this morning. I don't know how to make a tumbleweed noise, but it's appropriate. Okay, so once the market opens, as we discussed, I'm seeing it as a chop zone in here between 55.08 and we'll call it 55.28, Friday's high. And I'm just expecting us to go sideways for a little bit. I think they're going to try to get people long. They're going to pull back and try to get people short. They're going to do it a few times before they make whichever break that they make. I'm also going to be keeping a close eye on the Bookmap here on the number of icebergs that pop up. Okay. I discussed that potential scenario of the market being pinned, being artificially held in place by the options market. If that is the case, we will continue to see this right here. So the market will push up and then we'll see icebergs, buying and selling, buying and selling, buying and selling. Then it'll push down, buying and selling, buying and selling, buying and selling. And then it'll push up, buying and selling, buying. Right? We'll just keep seeing those icebergs on both sides of the market. That will be a sign that we're pinned. Okay. But if the market makes a break, if it gets above the chop zone high or below the chop zone low, and then there aren't as many icebergs, there'll always be a few. But if there's just much less, then we know the market is likely to actually make a move. To me today, the most important level to keep an eye on the ES is 55.28. That is Friday's high. Getting above it increases the odds of a move higher. Of course, we need confirmation. We need support. We need new buying above the high because they could look above and fail, right? But to my mind, if they can get above Friday's high, there's a lot of shorts to squeeze. So they likely won't fail. They'll find support and keep going. But we'll have to wait and see. Jason says, that singing you just heard, non-brigade members? That's only $10 a month. Yeah, so maybe you're a glutton for punishment. Whatever it takes. Wingmaster says, been short the Global X, going flat now. I think that's very wise. If the market's going to go lower, it will probably push up into this node first. It'll probably push up into 55.20 before it goes lower anyway. So one minute to market open. Okay, the market is open. Okay, pushing right into that chop zone low, looking for a bounce here around 55.08. If we don't get it, that is less bullish to see. If we do get it, we're expecting chop. Okay, no bounce at all. So next support just a little bit lower at 5,500. Okay, so we're getting a little bit of support here at 55, looks like 55.01. This is bearish to see. The fact that they immediately started pushing lower and we're bringing in new sellers at the low. So the question I'm asking myself now is, what was the chop zone low? 55.08, 55.09. Now the halfback, does that become resistance? If not, if we poke back up, great, it's chop, right? We're just going to go sideways as expected. But if this starts to become resistance now, that is bearish to come down and test the overnight low. Let's see what happens. As of right now, the iceberg setting on Bookmap is giving me chop vibes. Remember what I said, if they're going to chop, they'll push down. It'll be buyer, seller, buyer, seller, buyer, seller. Then they'll push up, buyer, seller, buyer, seller, buyer, seller. Well, what do we have down here at the lows? Buyer, seller, right? So they are artificially keeping the market down here, creating support. We also have this untested iceberg up at 52.20. That is likely to get tested as long as it remains there. So once again, looking for resistance at 55.09. If not, chop. Walter says, in your own personal trading, do you use any of the technical indicators? And if so, what are they? Boy, that's a tricky question to answer. So the indicators that I use just give me an understanding of what the market is going to do. I don't have any indicators where it's like, if I see, this indicator do that, I go long, or this indicator do that, I go short. They are just telling me the story of what the market is doing. It's what we call market generated information. So kind of like a weatherman uses, the charts and graphs and the information that a weatherman has to decide what's going to happen with the weather. That's what I'm using technical analysis to do with trading, right? I'm trying to predict, where does business happen? What business happens where? Okay, so as we just discussed, I see this area here as a chop zone. What's the business that's going to happen there? A lot of two-sided trade, a lot of up and down and up and down and up and down and up and down. So if we start to get resistance right here, that tells me the market's going straight down, right? That resistance would be bearish for a move to the downside. Because if they don't want it to go to the downside, they should get back up in the chop zone so they can do some more chopping, right? So when the market gets to that level, when it gets to 5509, then I'm looking at my technical analysis signals to tell me what's happening. What happens with the volume? Does it taper off? What happens with the liquidity? Do icebergs jump in or disappear? What happens with the ticks? Are there buyers or sellers, in the underlying assets, right? All of those pieces of TA just give me an understanding of what the market is doing. That understanding is either we're getting those sellers to take the market lower, or we're going to pop back up into the chop zone, head to 55.20, and then go sideways for a while up in here. Okay? How I trade that is based on my confidence in that understanding. If I feel very, very confident that the market is getting resistance, I'll go short, right? I'll put in a limit sell order. I'll put in a stop above the opening price, and I'll put it a target at Friday's low. But just because I see a signal of resistance doesn't mean I enter the trade. I also need to have confidence that I trust what I'm seeing. Speaking of which, we're testing that resistance right now. And it don't look like we're going to have it. It looks like chop. So the TA is only a way. It's a roadmap for me to understand what the market is doing. My decision of when to enter and where to enter is always discretionary, based on experience, based on just trusting that this level will hold or that level will break, trusting that, for example, as I was talking about this morning, I feel very confident that I understand what the market is going to do if we get above Friday's high. I believe there's going to be short covering. There's going to be stops in here that are going to instantly get taken out. So it'll be like pop and it'll go up a little bit and then it'll come back down. And if more shorts are going to cover, they will cover if there is support right there at the previous day's high. So if I get long in there, I see the pop, I see the market come back down, I see the support, and I get long in there, I can feel very, very confident that the market is going to keep going higher. So that to me is an excellent place to enter a trade, right? Whereas just now, the resistance did not hold on the halfback, which tells me we're going to chop sideways as expected, but I would not long right now based on that because it's just not as confident a thing. Knowing for sure that we're heading up to 55.20, I'm not as confident of as knowing for sure if we break Friday's high, we'll probably get some follow through. Does that make sense? It's all discretion, which is hard to teach. It's hard to teach people experience, right? But I can teach you how to read the market. I can teach you how to read the signals, the market generated information, understand what story it's telling you, and then you, through practice and years of experience, will figure out how to enter those trades and when. And then, of course, you start talking about risk management, and then shit gets real. Then shit gets real quick. Mr. Reed, good morning to you. Percy in the house. Welcome, welcome. If you have not yet, please smash that thumbs up button. We got 118 people hanging out. We can get a few more likes. Okay, so this is another level right here around 55.13 where the sellers need to smack the market down if they want to take the market lower this morning. We can see there's an iceberg there, so it's likely to get tested, and the opening price is just above it. So if the sellers want to take the market lower, they do not want it to pass back through the opening price, because if it passes back through the opening price, anyone who's been short so far this morning is likely to start getting squeezed. Now, that's just very, very short-term traders. That's chop. That's why you get chop. But the sellers need to defend 13 if they want to take this market lower. There was the first test. The iceberg remains there, so they're likely to poke at it again. Feels like chop to me. Sook says, good morning all. Smash the like button every time since we are cool pirates. Yeah, if you're a cool pirate, you smash that like button. It's a thing. Okay, don't question it. Don't you question it. Griff says NQ is doing the thing. Let's take a look at the Q. You're right. NQ is above Friday's high. That is bullish. Bullish to see. Okay, so now the question is, first and foremost, can they test the overnight high, which they should be able to do, 19,370. Okay. And then once they test that overnight high, they'll pull back down to look for support at Friday's high. Can they hold that support? Right? So remember what I just told you about the sellers on the ES. The same thing is now true for the buyers on the NQ. They want to test that overnight high. And then if they come back down, they want to hold Friday's high because the opening price is right below it. So if they go up and they come back through the opening price, guess what they're going to do? Squeeze all the buyers. And then they're going to turn around and come right back down. So they really want to turn Friday's high into support and hold it if they're going to keep this momentum going to the upside. But that is the first check for momentum to the upside. Making a higher high intraday today, make no mistake, is a sign to the world that the momentum to the downside is coming to an end. So bigger players are going to be much less interested in shorting now. So that's bullish to see. On the Q. Looks like we're going immediately to test that overnight high. And of course, the ES now back through that opening price. We are in a chop zone where they will chop it up. So the next major resistance above is around 55.20 to 55.25. We'll see what happens there. Do they smack it down? Yay or nay? Scalping strategy in the house. Good morning to you. Look at these icebergs, man. ES is looking choppy. Okay, so there's the test of the overnight high on the NQ. So step one, they got above Friday's high, check. Step 2, they tested the overnight high, check. Now they got to turn Friday's high, 19,303, into support. They got to hold that high and stay above 19,283 if they want to keep this momentum going. At this point, any new buying in the queue is bullish. Can they hold Friday's high? While ES goes sideways. There it is again. You guys see how they're doing this with these icebergs? They're artificially creating a high. Why? So they can squeeze the buyers that are chasing price and then come back in and poke at it again. This looks choppy, very choppy. They will chop it up quickly right now. Okay, moment of truth for the NQ. Here's that test of Friday's high. Once again, 19,300. They want to turn this into support if they can keep this momentum going. They do not want to pass back through 19,282. Can they hold it on the Q? Dun dun. Dun dun. Moment of truth for the NQ. If the buyers can defend, the market can make a move to the upside, looking to test Thursday's high. If they cannot, and the market pulls back through the opening price, it's going sideways, probably for a while. Can they hold it? Okay, so NQ is holding that support. That is bullish to see. Now let's see if the ES can follow suit, passing back through its opening price, 55.14. Wingmaster says it feels weak, ES. I would not describe it as weak. I would just describe it as choppy, right? They're not ready to go up or down yet. They're just going sideways. Good morning, Willie T. Oh, thank you for the heads up, Casal. I'll go fix that. Okay, so we got the pass through the opening price on the ES. So once again, any sellers are going to start to change their mind and think, maybe I shouldn't be short this market. It keeps pulling up through its opening price, and the NQ is strong. So I suspect that we're about to poke up and test this resistance at 55.20. See what happens there. John Doe says, Charles, I missed having you in the morning. Oh, you can have me any morning, John Doe. I'm here for you. Yes, I took a month off a month ago, but I'm back now. Join the brigade. We'll hang out every day. Link at the top of the page. Piratetraders.io/join to join the party. And finally, this iceberg at 55.20 is about to get a test. That's one of the things that's helpful about having this iceberg setting on Bookmap. So you see the market open. It moves very fast. There's a lot of volatility. There's a lot of stops getting taken out. The market cranks lower. It looks like, oh shit, it's going to crash and burn. It's going so much lower. But the whole time, that iceberg is just sitting there, right? Just like, excuse me, I'm liquidity up here and I want to be tested. So it doesn't necessarily mean you long the lows to come back for it, but it just means you're very, very cautious if you want to be a seller. Because you're thinking, maybe I wait to test this resistance first before I go short. You know what I mean? Somebody earlier asked about TA. That's some TA right there, my friend. Untested icebergs. Now, the trick is, because there's nothing in markets that's perfect, the trick is they can disappear it. So if the market had continued below the overnight low, they likely would have just deleted that. They would have disappeared it. But the fact that they did not increase the odds we would come back to test it. Which, of course, I said at the time. And they did not let very much liquidity fill there. Only 100 contracts. 150. Okay, so now we're into this node on the overnight. We're talking about the ES, where the market spent a lot of time going sideways. Here between 55.20 and 55.20, we'll call it 26, okay? That is likely to smack the market back down once again, right? And the chop continues. Now I will be laser focused on the halfback. Can that become support? So if they smack the market down here and the halfback becomes support, I will be bullish for continuation higher on the ES. I'm already bullish on the Q. Good morning to Pavel. Wingmaster saying Russell is green, testing higher now. I don't really focus that much on the Russell. Not that there's anything wrong with that. It's just too much for my brain to read too many markets at the same time. So right now I'm going to stay laser focused on the ES. We're pushing into resistance. One of two things is going to happen. Either a pullback to the halfback or we break through and we test Friday's high. And that's the only two things that matter to me. Pullback or breakthrough. And it looks like a pullback is what we're going to get. Mike says, greetings. I'm new to Bookmap. Welcome, Mike. Your timing is horrible. I'm about to leave. I actually was supposed to leave 5 minutes ago. You should head on over to Bruce's stream. Bruce from Bookmap will be streaming now, also on this same Bookmap channel. He will tell you everything you need to know about the Bookmap software and how helpful it can be. As for me and my community, we're going to head on over to the private stream. If anybody is watching this today for the first time and you've enjoyed what you've watched, you found it informative and helpful, you might consider joining the brigade. I only charge $10 a month. That's it, $10, and you get to watch me live stream like this every single morning. And the reason that I do it is because I like to have a community of people to hang out with and talk to while I'm sitting here watching market go up and down. So if you're interested in joining, it's $10. That's less than a single tick on the ES. And I promise you that over a period of a month, I will give you at least one piece of insight that will help you make a tick or stop you from getting in a trade where you would lose a tick. So to me, it's, the easiest decision in the world, but you should consider it. If you're interested, head on over to Piratetraders.io and you can join there. Otherwise, I will say goodbye, farewell. I appreciate the likes, and we will see you here next Monday if you're a bookmapper. If you're a member of the brigade, give me about 5 minutes, and I will be up in the private stream. As far as how to carry today forward, as I've said, I'm bullish on the NQ. They broke the overnight high, and then they turned the previous day's high into support. The next target to the upside is Thursday's high. Thursday's high at 19,394, and then we monitor for continuation higher from there. On the ES, I am still neutral. I still see this as a chop zone. So I suspect we're going to pull back down to the halfback at 55.13. If they can hold that as support, then I'll be bullish. The next poke will likely test Friday's high, and anything above Friday's high on the ES will likely cause some short covering and could create momentum up. Okay? So still in a chop zone on the ES, looking for support at the halfback. If we get it, bullish. If not, more chop. Okay? If the ES breaks today's current low, 55.01, you could just call it 5,500, then that changes everything. We're looking for a larger pullback with price. Okay? So if the buyers want to remain in control, they really need to hold the halfback here. With that, I will say goodbye and look forward to seeing everyone in the private stream in about 5 minutes. Thanks a lot, guys. Bye.